Introduction to Banking, Retail, Corporate, and Investment. Hi, my name is Christopher. Welcome to this journey through the fascinating world of finance. Today, we are going to study the chapter, Introduction to Investment Banking. In this chapter, we'll explore what investment banking is, the main functions it performs, and the various processes involved. We will also see how investment banks help raise capital, facilitate mergers and acquisitions, underwrite securities, and manage investments. By the end of this session, you will have a complete understanding of investment banking's role in the global financial system. What is investment banking? Investment banking is a specialized division of banking that focuses on creating capital for companies, governments, and other entities. This is done by underwriting new debt and equity securities, assisting in the sales of securities, and facilitating mergers, acquisitions, and reorganizations. Investment banks also act as intermediaries between issuers of securities and investors. These activities require high levels of expertise and financial knowledge. Investment banking is vital for connecting businesses that need funding with investors willing to provide it. Primary roles of investment banks. The main roles of investment banks can be grouped into four categories. Capital formation involves helping companies raise funds through primary market securities. Financial advisory services guide clients in mergers, acquisitions, and restructuring. Market making ensures liquidity in secondary markets by matching buyers and sellers. Research and analysis provide detailed reports on companies, industries, and market conditions, helping clients and investors make informed decisions. Capital raising, equity. Capital is raised by selling ownership shares in a company. Methods include initial public offerings, IPOs, follow-on offerings, private placements, and rights issues. Investment banks play a key role in determining the right offering size and price. They prepare registration documents, market the offering to investors, build the order book, and allocate shares. This process ensures companies get the funding they need and investors have access to new opportunities. Capital raising. Debt capital is raised through borrowing that must be repaid with interest. Corporate bonds are long-term debt securities, commercial paper is short-term unsecured debt, and syndicated loans involve multiple lenders sharing the risk. Investment banks structure these debt instruments to match the needs of both the borrower and investors. They determine suitable interest rates and find investors willing to participate. This process helps companies finance operations and expansion without giving up ownership. Initial public offering, IPO, process. An IPO is the process through which a private company offers shares to the public for the first time. Key participants include the issuing company, its management team, board of directors, and existing shareholders. Investment banks act as underwriters, with lead underwriters called bookrunners and co-managers to assist. Other important participants include legal counsel, auditors, regulators like the SEC, stock exchanges, and both institutional and retail investors. The IPO process involves preparation, documentation, regulatory approval, marketing, and selling shares to the public. IPO process, key participants, detailed. The issuing company is central to the IPO, as it is the entity going public. Management and the board provide strategic direction, while existing shareholders may sell part of their stake. Investment banks coordinate the offering, with the lead underwriter managing the process and co-managers assisting with distribution. Legal counsel ensures compliance with laws and regulations. Other key players include auditors who verify financial statements, regulators who approve the offering, and the stock exchange that lists the shares. Mergers and acquisitions, M&A, basics. M&A transactions combine companies in various ways. A merger is when two companies unite to form a new entity. An acquisition is when one company purchases another. Consolidations, tender offers to shareholders, and asset acquisitions are other forms of M&A. Investment banks assist with identifying targets, valuing companies, structuring deals, and supporting negotiations to ensure the transaction achieves strategic goals. M&A, investment banks' role. In M&A, Investment banks begin by identifying suitable merger or acquisition targets that fit the client's strategy. They conduct valuations using methods like discounted cash flow, comparable company analysis, and precedent transactions. They advise on deal structuring, including financing and tax implications. They also help negotiate terms and manage the execution process. This ensures deals are completed smoothly and in the client's best interest. Securities underwriting. Underwriting is when an investment bank helps a company issue new securities to investors. In firm commitment underwriting, the underwriter buys all the securities and resells them. In best efforts underwriting, they try to sell as many as possible without purchasing them outright. In all or none underwriting, the deal only proceeds if all securities are sold. The process includes due diligence, prospectus preparation, regulatory filings, marketing, pricing, allocation, and sometimes stabilizing the share price. Trading and brokerage services. Trading and brokerage services ensure liquidity in financial markets. Market making involves being ready to buy and sell securities at quoted prices. Sales and trading teams execute client orders and may trade for the bank's own account. Research services provide investment recommendations and market insights. Electronic trading platforms enable fast, automated transactions, including algorithmic and high-frequency trading. Asset management. Asset management involves managing client investments to achieve specific goals. This includes portfolio management, mutual funds, ETFs, wealth management for high net worth individuals, pension fund management, and alternative investments such as hedge funds and private equity. Investment banks' asset management divisions oversee large sums of money, generating revenue through management fees. These services are crucial for clients seeking professional investment strategies. Investment banking career roles. Analyst. An analyst is the entry-level position in investment banking. Analysts create financial models, perform valuations, prepare pitch books and presentations, conduct industry research, and support due diligence. They work long hours and handle detailed financial analysis. This role provides a foundation in technical and analytical skills. Analysts are essential in supporting senior bankers. Investment banking career roles. Associates are typically MBA graduates or experienced analysts. They manage analysts' work, conduct complex analysis, and interact more with clients. Associates play a bigger role in executing transactions and coordinating with different teams. They ensure deliverables are accurate and completed on time. This role bridges the gap between analysts and senior management. Investment banking career roles, vice president and director. Vice presidents, VPs, and directors handle larger client relationships. They lead deal teams, structure transactions, and oversee project execution. They are responsible for generating business and maintaining client satisfaction. Their work involves high-level decision-making and strategic guidance. VPs and directors also mentor associates and analysts. Investment banking career roles. Managing Director. The Managing Director, MD, is at the top of the investment banking hierarchy. MDs focus on bringing in new business and managing major client relationships. They provide high-level advisory services and approve final transaction terms. They represent the bank in significant negotiations. Leadership and business development are their primary responsibilities. Summary: Introduction to investment banking. Investment banks help companies raise capital and complete strategic transactions. They operate in equity and debt markets, guide IPOs, and manage M&A deals. They also provide trading, brokerage, and asset management services. The career path in investment banking moves from analyst to managing director, with each level having distinct responsibilities. Investment banking is vital for connecting capital providers with those who need funding, driving corporate and economic growth,